Hi and welcome to the market view for Wednesday the 30th of April 2014. Starting off with the 30-minute chart from yesterday, let's have a quick look at the trades that were available. We can see here we've got a black dot, which I will come back to in a moment, which indicates that this was a loss. It wasn't in fact, and I will explain why in just a moment. And then we have a second signal here that wasn't filled within the 3-bar criteria. So a poor day, but the market's still stuck in this sideways range, which we'll have a look at in just a moment. So first off, 8 a.m. we have a potential buy signal. The market is filled. But as I warned in yesterday's market view, you really needed to be out of the market before this economic news item was released, and that economic news item was the preliminary GDP figures, which actually came out not as bad as forecast. You can see there it was forecast at 0.9, came out at 0.8. But for whatever reason, the market took the decision to mark prices down, shake out all of the week longs, and then bring the market back up to where it was originally later on in the trading session. So at worst case scenario, you should have been out of here at break even, because the market gave you the opportunity to actually get out of this trade. You will see from the entry price up until prior to the economic news release, there were 10 pips in this particular trade. So you should have at least got out at break even, the worst case scenario. So a quiet day for yesterday in the 30-minute chart there. So that was yesterday. What can we look forward to today? Well, the only way we can actually forecast what the market is likely to do is to have a look at the daily chart, take a look at the bigger picture. So that's what we'll do now. Let me just move the chart over to the left and also make the price bars slightly wider, and then just bring it back over to the right so you can see it. So the market's still stuck in this sideways range. We're still struggling with this resistance area of 16821. Even though the market keeps breaking above this, it is failing to close, apart from the one day, and last night of course the market then reversing as well. We also have the resistance, which we can see from here all the way across at 168,409. So should the market offer a buy signal today, keep these two areas of resistance in mind. So make a note of these and keep them. Or if you wish, you can transfer these across to the 30-minute chart using the horizontal line tool. On the downside, if the market moves lower, again we're still stuck in this range, with the lower part being 167.72. So this market's stuck in this sideways range and has been now for at least 10 trading sessions. So this market is certainly coiling itself into a spring type of pattern, and of course once the energy is released, then the moves will be fairly significant. It's going to take some type of economic or geopolitical news item to move the market. The ones that we do know that are going to be released are the economic news items. So let's have a quick look at these. Starting off with the Eurozone there, we're just looking for red economic news items. We have the CPI flash due out at 10 a.m. This will be followed by the ADP non-farm employment change, which is out at 1:15 p.m. You don't want to be in the market when this one is released. Later on in the afternoon, we have the US also releasing the advanced GDP quarter figures. They're going to be out at 1:30 p.m. And then later this evening, 7 p.m., we have the FOMC statement, and you certainly don't want to be in the market for this one. So hopefully in between of these economic news items, we will be presented with a few trading opportunities to move the markets to the upper and lower trading range that the market is currently trading in. Right, that's it for me this morning. It's brief to the point, and that's because there's not a lot happening at the moment. All things being equal, I will see you in tomorrow's edition of the Market View. Have a great day, and as ever, thank you for your support and also for watching.